Okay, so you've got less than 20% equity in your property, and that's okay until you want to refinance or get special rates. And in this video, I'm going to teach you how to increase the likelihood of getting 20% equity or just getting 20% equity faster, because then you don't have to wait for as long. So the equity equation is based on the value of your property today minus the debt you owe against it as a percentage. So let's say it's worth $1 million, you owe 800,000 against it, then that's 20% difference. If you owed 850,000 against it, then 1 million minus 850 equals 150. 150 as a percentage of $1 million is 15%. So once you've done that equation and you realize you don't have the equity that you need to get the special rates, you can attack it from two different angles. Number one is you can pay down your mortgage, which is obviously what you're doing already, but that is the slow way because it takes obviously a long time unless you make big lump sum repayments, which you might not have access to. So automatically it's going to slowly reduce. But then the other side of the equation is the value of the property. Now you can wait until the market increases this value, or you can figure out a way to increase it yourself. Now, some houses may not have the scope for this. Some houses might. And what I mean by that, the perfect house would be one that needs a bit of work. So if you bought a rundown Duruppa, then you kind of have done well in terms of being able to increase the equity faster, because you can do up that house, get a valuer out there within 6 to 12 months after you bought it. And as long as the valuer agrees that the value's gone up, do that equity equation again, present that to the bank, and they will give you, hopefully, the special rates. If not, there's just small little things that you can do that will focus on increasing the value of the property. And if you are unsure about what those things are, because you needed a valuation when you bought the property, my best advice would be to call that valuer, I know it's a little bit on the nose, and ask him what is the best things I can do for a property in this area that's going to increase the value. Obviously, bathrooms, adding bedrooms, updating a kitchen is going to be the most obvious ones, but also things like adding a garage and all of that stuff. But the key thing is that you want to make sure that you're spending less money than what the equity uplift is going to be. So for every $100 that you spend, ideally you want to get $200 or more in value. And it's really hard for me to tell you exactly what to do because I don't know what house you bought. But if you bought a new build, unfortunately, it's unlikely that the equity is going to go up really fast because you've just built it. Obviously, if you bought the land and built the house yourself, then that's going to help. But those are pretty much my tips and tricks to get more equity. Hopefully that helps. And then once you have that 20%, you can obviously refinance different banks, get cash back, or just stay with the current bank and go from your low equity margins down to special rates. Depending on the bank, sometimes you have to wait until you're outside of the fixed term before they will apply the discount to you.